Perhaps you've been researching which investments to put into your own personal investment portfolio. In today's video, I am going to share with you a 3 ETF investment portfolio that I've put together myself for my investment ISA and for my self-invested personal pension. So this video won't include any very expensive investments. I'm also not going to be including any actively managed funds or trusts in this video. This is simply exchange traded funds, and just 3 of them. So exchange traded funds are simply a basket of different stocks. So for example, if you wanted to invest in the top 500 companies in the US, you would buy an exchange traded fund called the S&P 500, and that would mean that you're invested in those top 500 companies. So it's a really simple, user-friendly way of investing. And for me personally, I like the ease and low cost of investing in ETFs. So let's get started with the first ETF, which is going to make up 40% of my portfolio, and it's the Invesco FTSE All World ETF. So if you invest in a FTSE All World ETF, you're obviously getting exposure to the whole world. What's worth noting is that over 62% of the stocks that will be included in this ETF will be US stocks at present, so it's heavily dominated by the US market. But what you are getting is exposure to both emerging markets and developed markets. So emerging markets currently make up around 7% of the FTSE All World, and developed markets make up just over 92%. The number of equity holdings, which means the number of stocks that form this ETF, is currently sitting at 2,645, so you're getting access to all of those individual different stocks within this single FTSE All World investment. So you might be wondering why I have gone with the Invesco FTSE All World rather than, say, for example, the Vanguard FTSE All World. Now, I have a more detailed video on that if you want to check it out. At the end of this video, I'll link it here. But basically, the Invesco FTSE All World ETF is much, much cheaper than the Vanguard FTSE All World ETF. So the ongoing charge for the Invesco ETF is 0.15%, whereas the ongoing charge for the Vanguard FTSE All World ETF is 0.22%. That might not sound like a big difference, but when you are investing, small amounts really do compound over time. So if you can get the lowest fees possible for a very similar, if not identical product, then I would suggest you do that. The code for the Invesco FTSE All World ETF is FWRG, and that is the accumulating version of this ETF. Now, an accumulating ETF simply means that any dividends are reinvested back into the ETF, so they are not paid out as an income. You are still essentially getting them, but they're just reinvested. Whereas if you wanted to have an income from dividends from an ETF, then you would choose an income ETF. As I said, the fees for the Invesco FTSE All World are very low. However, what I will say is it hasn't been established for as long as Vanguard's FTSE All World. So I can't give you 3 and 5 year annualized returns simply because it hasn't been established that long. So I'm going to give you the 3 and 5 year annualized returns for Vanguard's FTSE All World in case you're interested. So the 3 year annualized returns are 7.69% for the FTSE All World, for Vanguard's FTSE All World, and for the 5 year annualized returns are 9.65%. So annualized returns simply means that on average every year over the last 5 years it has achieved a 9.65% return. So obviously when you're investing, your capital is at risk and you will see peaks and troughs in the market. So it's not as if it's steadily going up at 9.65% a year. That is an annualized average return over the last 5 years. Okay, so the next ETF that is going to make up 35% of my ETF portfolio is the UBS S&P 500 ESG ETF. So the code for this is S5SD. So what this ETF does is it takes the top 500 companies in the US, so the S&P 500, and it screens them for ESG, which stands for environmental, social and governance. Now, this might be an area of investing that really interests you, or it might not be an area that particularly interests you. However, what interested me in particular with this ETF was that actually the performance has been stronger than the performance of the standard S&P 500. So the fees are really nice and low at 0.10%, and the performance is actually currently 5 year and 3 year annualized returns are higher than the 5 year and 3 year annualized returns of the standard S&P 500. So as I said, you're screening some of those stocks out of this ETF. So instead of getting 500 different stocks, you're getting 320 different stocks in this ETF, But obviously, if you are looking to build your own investment portfolio, you could decide to keep it nice and simple and simply go with an S&P 500 ETF, because you've got so many years of historic results that you can take a look at. Obviously, historic results and past performance is not indicative of future performance, but I always think it's very interesting to take a look at it to familiarize yourself with the kind of returns that you might expect, but obviously they aren't guaranteed. And then the third and final ETF that I wanted to include in this video and this ETF portfolio is the iShares S&P 500 Information Technology Sector ETF. So I actually have a standalone video which I will link here on this ETF. I have been invested in this for a number of years and have been very happy with its performance. It is a more risky ETF. So in terms of standard deviation, so if we have a look at the other ETFs and compare it to those, we're looking at 3-year standard deviation here, and where all else is the same with an investment, the lower the standard deviation, the better. So this ETF has a standard deviation of 19.33, whereas the UBS S&P 500 ESG one has one of 12.22, so lower, so potentially lower levels of risk. And then the Vanguard FTSE All World ETF has a 3-year standard deviation of 10.21, and as I said, I'm using that to compare because the Invesco FTSE All World hasn't been established for 3 years, so I can't give you the 3-year standard deviation for that one. So this is a much riskier investment, much more volatile. So potentially it might not be right for you. For me personally, it's an investment that I feel comfortable with making. But as I said, it's much more volatile. There are also much less stocks in this portfolio. So there's only 67 stocks that form this ETF. So it's nowhere near as diverse. You're not getting nowhere near the 2,645 stocks that you are getting if you invest in the FTSE All World. So yeah, a very limited investment, but one that has performed particularly well. So its 3-year annualized returns are 19.17% and 5-year annualized returns are 23.49%. And then just going back to the UBS S&P 500 ESG ETF, the 3-year annualized returns for that are 12.68% and the 5-year annualized returns for that are 14.58%. Just to say, there is another alternative to the iShares Information Technology Sector ETF. If you want an alternative from Invesco, the Invesco equivalent, the code for that is XLKQ, and that has slightly lower fees and has performed very well, but I'm keeping IITU simply because I have been invested in it already and it's already sitting comfortably in my portfolio. Now, I just wanted to address a few points very quickly. I am aware that there will be a lot of crossover with these 3 different ETFs. I'm aware that the top 10 in each of these different ETFs is likely to have a huge amount of overlap. I understand that the top 3 holdings for all of these different ETFs is going to be Microsoft, Apple, and Nvidia. What I think is really important is that I do understand that. Obviously, where possible when you're investing, it's good to try and avoid fund overlap, so potentially not having some of the same investments within your investment portfolio. However, obviously I have chosen a FTSE All World as the initial investment, which is going to have most of the stocks in the world. So there is going to be overlap with the second 2 ETFs that I'm including. And then obviously with the IITU, which is the tech stocks taken from the S&P 500, there is obviously going to be crossover with the previous investment, which is the ESG screened S&P 500. I am very aware of that, so I do understand that there is crossover, and for me personally, I'm comfortable with that. But it's really important to understand that there is that crossover with these different ETFs. You could go about building a portfolio that was more diverse. You could invest in ETFs that were, for example, in the developed world, and then invest in separate emerging market ETFs. This is simply the way that I wanted to build this personal portfolio for my own investment needs, and I wanted to share it with you in case it was a good starting off point for you to go away and do your own research. What I will say is, with investing, it was really hard to get the list of investments down to simply 3 ETFs. It's so tempting to keep adding on different ETFs into what should be a very simple portfolio. I know historically from my investing past, I did have a habit of kind of collecting different ETFs, different actively managed funds and trusts, and then I'd build these massive portfolios that were actually much too complex and didn't serve my needs, and they formed as more of a kind of collection / shopping list of different ETFs and different funds and trusts, whereas I really want to pare it back and keep it very simple with these 3 ETFs rather than building up a portfolio that doesn't have the cohesion or the goals that I'm looking for. What I will say is that sometimes people will want to have something like Vanguard's FTSE All World or the Invesco FTSE All World that I featured in this video as the core of their portfolio, and then they might want to add on some different satellite investments. So often people are interested in investing in specific themes, so I have got a separate video on thematic ETFs if you want to check that out. Also, often people might want to have some gold and silver within their portfolio, so you could look at an exchange traded commodity rather than an exchange traded fund. So that would be something like the iShares physical silver or iShares physical gold, or Invesco also have an equivalent as well. So sometimes people want to pad their portfolio out with something like gold and silver. I personally decided not to make that decision. I have some money set aside in a high interest savings account for emergencies, so that hopefully I don't have to dip into my investments. However, gold and silver is often included within an investment portfolio to try to stabilize it somewhat. There are so many different investing options, and it's so interesting, and I really enjoy making videos on ETFs and all of the different options that are available. But for today's video, I really wanted to keep it simple and knuckle down and just give you my top 3 for this very simple investment portfolio. As I said previously, the third and final investment is much higher risk. So even though I'm comfortable with having it around 25% of my portfolio, if you are uncomfortable with volatility within your investment portfolio, or uncomfortable with higher levels of risk, I would potentially think about not including it, or potentially have a very small amount of it in your investment portfolio. All of these investments should be very widely available depending on which platform you're using. So they're available on, say for example, Barclays, AJ Bell, Hargreaves Lansdown, Trading 212, Free Trade, Fidelity. They are all available. What I will say is that if you are investing on the Vanguard platform, obviously you can only make Vanguard investments, so you would have to stick to Vanguard investments like Vanguard's FTSE All World. Whereas if you are using a different platform, then you could invest more freely in different exchange traded funds. So I hope you enjoyed this video. Please do not take it as financial advice. Do not go away and make these investments for yourself. This is me simply thinking about the risk level I am comfortable with and the goals that I have for the next 5 to 10 years or even 20 years with my self-invested personal pension. So yeah, please don't go ahead and copy me. Please do your own research, make investments that you feel really confident and comfortable with, because you really do want to stick with any investments you're making for the long term and feel comfortable with them. Thank you so much for taking the time to watch, and have a lovely day. Bye bye.